Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. And today, got a whole bunch of good news stuff for you. We're going to start it off with EOS is not a blockchain, has significantly lower transactions per second than advertised, and is nothing but RAM, market, and cloud service. Well, I called this a long time ago, and there was like 50-50. Some people hated the fact that I flooded on EOS. Some people were all about it because those people knew the truth. Because you don't make $4 billion and then have a crappy project. So let's go. Let's find out what the Wythe block study found out about it. So a blockchain performance testing company completed a 3-month-long independent benchmark testing on the EOS blockchain. The test results, published by the company on November 1st, drew the inference that EOS doesn't meet the technical requirements to be classified as a blockchain, and that it has substantially lower transaction throughput capabilities than what EOS claimed. EOS is one of the most controversial projects to emerge from within the confines of the blockchain sphere. This is primarily due to its year-long, record-breaking ICO that helped raise $4 billion, literally. And then they also pre-mined, or they kept 10% of the coins as well, so which equaled about $5 billion or so. Described by some as greedy at best and deceitful at worst. In fact, the project had no minimum viable product by the time of its launch, and relied heavily on open source development and bounty campaigns paid to third parties to help fix thousands of bugs and flaws in its source code for $4 billion. Furthermore, EOS mainnet launch was terrible, to say the least, and has been marked by weeks of delays, reported frozen accounts, and reversed transactions. Absolutely horrible. So the company behind the testing, named White Block Incorporated, so it is White Block, oh my god, it was spelled wrong initially, allegedly created an exact replica of the EOS network with the purpose of testing its ability to withstand stress conditions and potential faults to be encountered during normal operations. The metrics that were evaluated in a 25-page long report were the transactional throughput, the resilience, the effects of variable transaction rates and sizes, the average time to finality for a transaction, fault tolerance, and partition tolerance. In fact, the report presents the results of the 3-month of research efforts deployed by the company to analyze EOS's architecture and benchmark its functional performance under different environmental conditions. So it says through practical testing and experiments, in a controlled laboratory setting, this research provides a thorough and objective model of EOS. So basically, the performance of the EOS blockchain was reportedly tested on the replica with the intent to evaluate the trade-offs EOS system makes in relation to 3 fundamental metrics: performance, decentralization, and proximity. It is of consensus among developers and blockchain experts that blockchain protocols exhibit much lower transactional throughputs as compared to client-server architectures. As explained by the study, this observation is due to their distributed and asynchronous nature, which requires computationally exhaustive consensus algorithms and security mechanisms that should be implemented in order to circumvent the need for trust when transmitting data. The report claims that the transaction throughput of the EOS system does not exceed 250 transactions per second, even under an optimum setting of 0 latency and 0 packet loss. Tests under real-world conditions, 50 ms latency and about 1% packet loss, saw the performance drop below 50 TPS, or rather a tenth of a percent, whatever. This range is in fact comparable to the performance exhibited by Ethereum, around 20 TPS, and Bitcoin is around 11 TPS. So it's worth noting that EOS technical white paper claimed that EOS could possibly scale one day to process millions of transactions per second for $4 billion. Another stunning claim held by the report is that having limited cryptographic proofs and lacking algorithmic enforcement results in the delegated proof-of-stake derived algorithms implemented by EOS not having any form of Byzantine fault tolerance. So, absolutely terrible. Basically terrible. Another thing about EOS is that, you know, there's like master node operators, and these guys make, I mean, whoever runs it basically makes $2-3 million a year. So that's why you don't pay fees on the EOS system. Instead, those fees go to the node operators. So there's no mining or anything like that where people can actually put in work and get in funds back. It's just you have to be elected to be a node operator, like a master node, and then you get $3 million a year. So it's just like basically the most fascist system ever. It never worked on release. Basically raised $4 million just to have other people fix their bugs. Just amazing. Like what happened to the $4 billion? I don't understand. $4 billion is a lot of money. To be able to make this coin and just make it simply and then make it bug free could be done by a group of master degree computer science majors at any given college for a fraction of that $4 billion. Just the pay of computer scientists or cryptographers working on this project, that would be the base. That's it. That's all it would require. 4 billion. What happened to the 4 billion? Where did it go? Like, I don't understand. If you can't fix your own code and have to have third parties help it, then what are you doing with your money? Like, why not just hire people and then fix it instead of admit that everything's messed up and you need third parties to help? It just EOS gets to me. It gets to my bones a little bit. Not the best article describing the horrible features of EOS, but just goes to show that EOS doesn't match up to anything that they said at all. So moving on, this is an interesting article because it states Texas regulator issues cease and desist order to cloud mining company. And you might be like, which cloud mining company? Genesis Mining, Hashflare? No, in this case, it's going to be in the Australia-based cloud mining company AWS. Per the document, AWS Mining, along with its multiple agents and chief marketing officer, Hosea Kostek, I don't know, whatever, have violated the Texas Securities Act by luring the state's residents and purchasing AWS, unregistered cloud mining power contracts, and promising a 200% passive return on every investment. The company's website also reportedly offers investors to join a multi-level marketing matrix for $20, after which they could earn commissions by operating as sales agents. So I remember this. Let's go to this video right yeah. So this is a video I made on October 29th, and I happened to get a comment on this one. And normally I don't really argue with people. I don't mind people commenting on the channel, of course, with a different opinion. A lot of the times they just don't even bother because it just turns into a comment fest. But once in a while I have to just pitch in a little bit. Says, my cloud mining contracts are stable and are paying out well. Neither of the two companies you mentioned. So I was mentioning Hashflare and Genesis Mining in this video. So the cloud mining company that he is talking about is AWS. So I just said doubt it. And he said, maybe you should just look past at the media and all the exceptions of people beating up charges and declining lifetime contracts, whatever. So I said, no, it's the math. I mean, the daily rewards of Genesis Mining, etc., per terahash against their daily maintenance rate. While Genesis Mining came out with more efficient mining, you have to pay for that up front now with their new contracts. So you have to pay for, you basically pay for the maintenance rate. So you might get like $10 a Bitcoin. Wow, congratulations. Or you might get no Bitcoin and you just straight up paid them for their electricity bill. Literally. If the price went down even further than that maintenance cost, you paid maintenance cost for them to mine, literally, and they will keep their coin. They keep their coin, they don't give you any coin, and you pay them. Cloud mining is not smart, plain and simple. It's just not. It doesn't make any sense. You can just put that money into buying crypto outright. Otherwise, you are paying someone to mine for you. They keep your money, and when prices are down like this, they also keep the crypto. At least mining yourself, you get to keep the crypto regardless of profit or not. Then I looked at his YouTube to discover what's going on here. Let me just take a look at the guy's YouTube and see, is he really making money? Is he making videos about this sort of thing? So I did. As I looked at your channel, you're making 30 cents a day mining, and most of the money comes from your referral links. You are over people for their money. Shame on you. Shame, 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 shame. Little Game of Thrones in there. Little walk of shame. So moving on over to his channel, you might be like, hey, this guy doesn't have any cloud mining videos. Yeah, not anymore. He removed them all. I don't know why. I don't know if it was my comments or if it was the fact that the thing went under, or if he decided it was not a good idea at all. If he thought maybe he'd get in trouble for it. I don't know. But, you can even say here, My Crypto Journey. So basically, he had videos that was AWS mining, and he showed his daily profits. And he was making, literally, 30 cents a day in mining. And then you would see he would even show his referrals throughout. So it'd be 30 cents, and then $4 or $8. So he'd be getting all these referral links. So most of the money was actually coming from referral links. And if most of the money is coming from referral links, then that means no profit is actually going out to people. And that's called a pyramid scheme. That's called a Ponzi scheme. AWS is basically a multi-level marketing pyramid scheme. And so that's why I commented on the last time there, because he was making 30 cents a day, and he's obviously signing a lot of people up and making videos on it, but he has since deleted them, and I don't feel bad about that at all. If that was me that did it, to me, because people shouldn't be signing up to these and giving their money to these multi-level pyramid schemes, and then whenever you sign up to it, you make somebody way more money than you're going to make, and that's nonsense. Anyway, moving on to the next article here. Israeli central bank to hold off on issuing a digital E-Shekel coin. Very, very scary article, so I saved it for last. A group under the Bank of Israel has published a report on a proposal to issue a national digital currency. Really, really bad. Not good. Everybody knows how I feel about national digital currencies, because you'd have to go to a bank, get a public key. The government would know that private key or public key, and probably your private key as well. And the government would be able to query your public key anytime, and that would be connected to your bank account and your social security number and your ID. So it would really be connected to you, way more than Bitcoin is or any other coin out there. And then they would know every time that you receive money, send money, and they'd be able to track that everywhere, and it would just be total Orwellian banking. Absolutely horrible. It would be an extreme detriment to mankind, let's just say. The team, which was last set up November, has identified several potential advantages to the technology, but has advised the central bank not to act until other institutions throughout the world have done so first, because they want other people to mess it up real bad first. So the 40-page document mainly presents the advantages of issuing E-Shekel from the standpoint of the Bank of Israel. The first of these considerations would be to give the public access to the central bank's liquidity in the event that use of physical cash ever declines significantly. Another would be to support the payment system in the country and make it more efficient. Additionally, the team found that if it bears interest, the E-Shekel could become a monetary tool in the hands of the central bank. Oh my god. It's going to be horrible. It's going to be horrible, people, and it's going to happen. It will happen eventually. There will be a US dollar coin or something like that. There will be a euro coin. Someday, there will be a world e-currency or at least national e-currencies, and they will be horrible. So instead of going to a website and generating a public key and a private key for your Bitcoin wallet or something like that, or whatever it is, whether it's an exchange or just a wallet you downloaded, you'll have to go to the bank. Because to get a bank account now, you have to go to the bank. And what do you have to show them when you go to the bank? At least in most countries, you guys could probably follow me on this one. You have to give them your social security card. You have to give them your ID. You have to give them your address, your phone number, everything about you, essentially, they have to know to open a bank account. So it would be a digital bank account. It would be the exact same process, except they would give you a public key, and they would know that public key, and the government would know that public key. And they would be able to track it everywhere to anyone. So if you receive money from any shady figure, whether they're, it just doesn't matter. It would be very, 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 very trackable, to say the least. And so you'd basically never be able to do anything you wanted with your money without the government knowing. And it's kind of like that today with a debit card, but at the very least, you could take out money out of a bank, and they'll know, yeah, okay, you took out this money, but where did it go after that? And I'm not saying do a ton of illegal things with your money, but I mean, sometimes maybe we just don't want the government to know what we're spending it on. I don't know. That's just a small thing to ask. So Additionally, the team found that if the bears interest shekel, okay, monetary tool, the report also suggested issuing an E-Shekel could help combat the shadow economy. Exactly. Meaning it would make it harder for people to conduct unreported financial transactions. In contrast, among the limited disadvantages the writers of the report found is the fear that the public would think that the move was just a big brother attempt to maintain constant surveillance on Israeli citizens. You think so? Other concerns the team identified are that digital coins wouldn't be accessible to people who are technologically challenged. They also expressed concern that a possible technical failure of the e-shekel could harm the central bank's reputation. You think? Unlike Israel's dynamic, fast-moving, and tech-focused private sector, the country's public institutions are extremely conservative and usually reluctant to adopt new technologies. Considering this, it is no real surprise that the Bank of Israel has adopted a wait-and-see approach to digital currency, despite mainly finding advantages to potentially issuing one. So no central bank in an advanced economy has yet issued digital currency for broad use. The team concluded, while acknowledging that many such institutions around the world have already examined the possibility, this makes it clear that the Israeli central bankers won't take a step forward until they see another leading institution such as the Federal Reserve or the European Central Bank do it first. Still, the possibility has not been taken off the table, as the same team will continue to monitor developments in the field, particularly at other central banks. So they're just going to let other people mess it up first. Of course, that's the best way to do it. Hey, maybe you should swing on that rope. And you're like, I'm not going to do it first because that rope looks like it's going to fall. How about we make that guy do it? And then when he does it and he swings, and depending on, the outcome, whether it snaps and falls and he busts his ass, or he goes into the water and he's like, that was awesome. Now everybody else gives it a try. And they plan to report their findings on the matter to the Bank of Israel's management on a semi-annual basis. The group has also recommended discussing the subject with international bodies, such as the Bank for International Settlements, the Organization for Economic Cooperation and Development, the International Monetary Fund, and MrSotko cryptocurrency. So I'm going to be flying to Israel twice a year to meet and talk about cryptocurrency with the central bank. Trust me, it's in there, guys. It's in there. It's at the bottom. It's in there. It's in the article. I didn't make that up. It's in there. Anyway, guys, so I do believe thoroughly in the future we are going to have digital currencies just like cryptocurrency, just like Bitcoin, but issued by the central government, issued by the central bank of whatever government you are from. It's going to happen. It's going to happen. Eventually, more and more people are tech savvy. Every generation that comes along, and every 5-10 years, that whole generation is now tech savvy. And the only people they would be concerned about is the elderly generation who don't really have some of which don't have smartphones and have no idea what cryptocurrency is or how to do this, that, or the other thing. So that's like the portion of the population that they're really concerned about. The younger portion is going to be able to jump on this really easily. But, again, it is the great, great evil. Again, you'd have to go into a bank, get a public key, and then no matter what transaction, whether you're going to the gas station, whether somebody's paying you to paint their house, whether you're going to go buy your weekend drugs, it doesn't matter. Whatever you're going to buy is now going to be connected to the next person. And whatever they use with it is going to be connected to that group of people. So you'd be able to follow this big web of the block explorer, if you will, all the way back to one person or to numerous people, and it would just be gloriously easy for law enforcement, for the government to find evildoers, which is okay for like really, really bad criminals. Like, sure, like, yeah, you probably shouldn't be doing that, but like little tiny petty things that nobody really cares about, they would be able to get you for. And it's very Orwellian, not good at all. But I hope you guys enjoyed this episode, and as usual, I will see you guys next time.